tracking for you this evening. Venture debt firm Stride Ventures has announced the closure of its India Fund 3 at $165 million, achieved within a year of the first close in 2023. Now, this third fund has a diverse mix of investors that includes insurance companies, family offices, corporate treasuries, and high net worth individuals. To take us through the plans with Fund 3, joining me now is Apurva Sharma, the managing partner at Stride Ventures. Also joining us is Romita Mazumdar, founder and CEO of D2C skincare brand Foxtail, one of Stride's investee companies from Fund 3. And also with me, Arundhati. Apurva and Romita, welcome to Startup Street. Let me start with you, Apurva. Fund 3's portfolio showcases companies like Foxtail, Bluestone, Move, NatHabit and Agrostar, basically representing the fund's focus on consumer brands, financial services and clean tech sectors. So tell us, what has been the ticket size and how many companies would you be investing in from Fund 3?
First of all, thank you so much for having us on CNBC. Very happy to be on this platform. The idea is to invest in about 50 to 60 companies across the length and breadth of the startup ecosystem. In terms of sector focus for us, consumer has been a primary sector for us, and around 40% of our earlier two funds has also been consumer. So it'll still remain one of our priority sectors. I'd say consumer, financial services, and clean tech, which encompasses whether it's companies in the solar space or EV space, etc. So these three sectors will be priority to us, and about 55 to 60 companies that we intend to invest over the course of next 1 year out of Fund 3.
All right. Hi, Arundhati here. So before we go to Romita, Apurva, why don't you tell us what excited you about Foxtail and what is the impact you hope it makes in the market?
Sure. So I think, when we came into Foxtail, the revenue was, I'd say, 1/4 of what it is currently. And I'd let Romita speak about the numbers. But in the last 1 year, the company has grown 4x in terms of monthly revenue run rate. And what really excited us when we were evaluating Foxtail was her obsession towards differentiated high efficacy products, because it can be a cluttered market. But I think her laser sharp focus on high efficacy products and high repeat rate, which she says is her only, go-to metric, was what excited us towards Foxtail. And that eventually results in, lower customer acquisition cost, higher repeat rates, higher customer lifetime value, better return on ad spend, all of it, which is really differentiated if you compare it to other companies in the same space.
Okay, so speaking of differentiation, and Romita, coming back to you, there is a lot of competition in the D2C skincare market. If you could tell us, how does Foxtail differentiate itself? Also, if you could elaborate on your offerings.
Thanks for having me here, to you guys as well as Stride team. Glad to be a part of their journey here. So for us, we are solving for the Indian skincare market, right? We have to understand why Indian consumer today is ready to pay more than 200 rupees and ready to migrate and pay a little premium to that. From a differentiation perspective, what she really wants is a product that works for her. So what we've really differentiated on is efficacious products. Having said that, I always say India is a 2-minute noodle market. You cannot wait for 4-5 weeks to give a result. So the second thing we solved for when it came to efficacy was instant efficacy. There's always a part which is delayed gratification in our products. But when you're using a product, it should have those qualities that can become a habit formation product for you. So we've really been able to, with a very consolidated set of products, consolidated set of SKUs, be able to solve specific problems that are very specific to the Indian skincare market, whether it's photo damage, whether it's free radical movement on your skin, whether it's dullness, dehydration, tanning, etc., and do it in a very, very short period of time in terms of efficacy. For example, our vitamin C serum gets activated with an instant use, right? So it reduces acne scars within 3 days of use. It reduces it by almost 30%. So that's really the differentiation that we have. That's what has helped us scale so far. We basically, if you could look at it, we have 18 SKUs, like, you talked about it, and we started with, when Stride came in, we were probably 2 crores a month. Today, we are roughly a 250 crore run rate company. So we've grown from a 20 crore, 25 crore run rate company to a 250 crore run rate company in a period of 18 months. Right. And that scale up has just happened because of great products that lead to high retention and high LTV for each SKU.
Absolutely. So you outlined to us how you're staying ahead of competition in a very crowded market. But you've also said that you're creating innovative, safe products using technology that also caters to the changing environmental and lifestyle needs of women, right? So
Yeah.
how environmentally friendly are your products?
See, we try to be very mindful of being environmental friendly from our R&D stage to the stage that we are able to solve for the consumer. So every product that you see is EU compliant, but we are also extremely environmental compliant when it comes to disposal of any wastage that happens at the factory level, at the R&D level. We also only use plastics that are biodegradable. So these are not really fully plastics. We use APVs and certain plastic materials that can be that are 100% biodegradable, because of which we also take a gross margin hit, given the packaging cost is a little more expensive. Today, one big problem we are trying to solve for that once I deliver it to you, do you need to order another set of packaging? Can we use sustainability there with you resending us the packaging? But of course, the logistics and infrastructure in India is something that's still evolving, and I think it will enable D2C brands like us to get there. But that's primarily where we are with our sustainability. The other part of environmental damage is also what happens to your skin, right? And the easiest way to understand it is that pollution causes free radical movement on your skin, which causes dullness and aging. And each of our products, no matter what you're buying it for, whether you're buying it for acne or brightening or dehydration, we solve for that photo damage and free radical movement of the product through antioxidants in all our products. And that's the reason we have delayed gratification, what we call as a efficacy. So there are both environmental sides. There is one which is more on the how we make the products and how sustainable we make the product, and one is how we make your skin more sustainable and more healthy for environmental damage that happens in the day-to-day environment.
All right. Speaking of being environment friendly, and Apurva, let me come back to you. Stride Ventures recently announced a $120 million investment in climate conscious startups, also claiming it is one of the largest climate conscious dispersals within 2 years by an India venture fund. So talk to us about the impact you've created so far.
Sure. So I think, we are very, very focused on how much investment can we make in the climate tech space. And this encompasses solar companies and also EV companies across the value chain, whether it's OEM, ride-hailing operators, charger manufacturers, battery swapping guys, recycling. So I think we have made investments in each vertical across the value chain of EV. And I think that's our contribution towards making sure that the EV adoption is better in the country. And, given the sector is extremely CapEx intensive, you need alternative sources of finance and not just equity. And that's our little contribution there. We've thought that we'll end up investing about anywhere between $500 million to $1 billion in the next 5 years. And we are just charting out our trajectory in order to support with that kind of quantum.
All right. And, Apurva, let's also talk about returns then. Stride Ventures has returned its Fund 1 in its entirety. So talk to us about the kind of returns you've seen.
Sure. So Fund 1, we have returned the entire capital, and we have achieved a net XIRR to investors of about 18%, which is one of the best in the industry when you compare this asset class. And we returned it right in time without any extension, which has definitely demonstrates our credibility. And we have seen a lot of repeat investors from 1 in our Fund 3.
All right. Speaking of numbers and speaking of returns, Romita, coming back to you, Foxtail has about 18 SKUs in the skincare portfolio, like you mentioned, and it also aims to achieve an ARR of over 450 crore rupees by the end of this year. What makes you bullish? Where do you see the next leg of growth coming from?
See, we are a digital-heavy company. 90 to 95% of our revenue is fully digital between website and marketplaces. We are also website-heavy. We are probably the only BPC brand with 50% of our revenue coming from website. We continue to grow digitally 20% month on month. That is one of the levers that will, and one of the growth trajectories that will continue for us over the next 2-3 years. So penetration into the current channels, which includes channels like Nykaa, Amazon, and of course our own website. From a tech perspective, we are transitioning to make our website even more personalized as we grow, to enable better user experiences when you are coming, but also better retargeting, to solve for ROAS optimization on the marketing end, to bolster the P&L that we already are quite. Our website is profitable, but we have to increase the margins that we are operating with. So there is penetration in the existing channels. We are also launching body care. So where you see us being around 18 SKUs in skincare, body care as a TAM is a smaller TAM, but it will be a strong addition and a AOV builder for the current users who are coming into our website. So there will be a basket size increase that continues to be a lever that we are still just very, we've just scratched the surface on. So along with number of users, there'll be an EOV increase. So it's primarily all our levers are digital. We are very, it's not just bullish. I know we'll do 450 crores in the coming years, in the coming fiscal year, and hopefully be able to talk about it in a year's time with you guys, with it being a reality rather than a projection. Yeah.
Right. But Apurva, if I could bring you back into the conversation now, as a sector agnostic firm, you support over 140 startups across diverse industries through your 3 funds. So what is the biggest trend you see in terms of funding for high growth startups in 30 seconds, if you can?
So, I think the funding environment has definitely improved over the last 6 months. We still see that the valuation multiples haven't gone back to where it was in 2021. So I think that has been more a strategic fundamental shift rather than just an investor sentiment change. Valuation multiples are sobered, but good companies are raising capital. The diligence is longer, the ticket sizes are smaller. In terms of sector coverage, we see early consumer, Series A, Series B consumer companies are attracting capital. And in terms of growth stage, I see financial services, being a very hot sector in that sense. People finding a lot more comfort in backing financial services companies. So consumer and financial services, consumer early financial services growth to mid. And EV, of course, has been prominent in the last couple of years.
All right, Apurva, we've completely run out of time, but many thanks for joining us today. Wish you the very best with your Fund 3. And of course, Romita, many thanks for joining us today on Startup Street. Keep growing and keep glowing. Thank you so much.
Thank you so much. Thank you so much for having us.
And moving on, retail tech